Hello friends, welcome to Pro Trading Zone. So another action-packed day again in the Bank Nifty, and the things were running haphazard in the first half of the day, but it turned out to be a good day for us again. The reason for a good day was that we followed our trading strategy to the T. We made it a agenda of ours that we will exit our trade when we find it uncomfortable to be in the market. So as soon as we found that market was going haywire, we just exited our trade and didn't do much after that. Today it was a longer trade, but we sat through that trade and made a good money out of it. So according to the market analysis of ours in the first half of the day, that was approximately till 10:30, the market was extremely choppy in the beginning. Even though market opened very high, approximately 37,873, it came down to 37,700. So it straightforward came down. So whenever this happens and it doesn't cross the 50% mark of the first candle, and the candle form below it is either green or red but stays below it, it is a sideways to downward market. So this is not a rule, but this is what happens in the market, and this could be one of your setup when you take a directional trade. But this is not something happens or we consider as a good trade for a zone trader that we do. We are zone traders, we are a non-directional trader and follow zone trading strategy. So right now it came down, it jumped again for 300 to 400, and then again came down 300 points, and then again went 300 points, then again came 400 points down. So market in the first half was extremely choppy. Whomsoever would have taken a trade without proper analysis or without consideration or proper formats of its trade, or proper setup was not considered, would have been in a mess, or it would have made extremely good profit just because the direction was right, not because of its trading. And later when we took a trade over here at approximately 1040 to 1045, we believed that market has calmed down and it would be going on the sideways. As it was going on the sideways, it started coming down, but it started going up again. Here we considered some of the pivot points. So pivot points are the points which are very useful for us while taking a trade, and for a zone trader, pivot points acts as a litmus test what to do with its strategy. So today we, as market was going up and down, we considered important pivot points: 37,993, 37,958, 37,985, 37,741, 37,542. These pivot points are drawn depending on what were the previous day's important points or the week's previous point important pivot points. So as soon as it came to this area, because yesterday it was calm in this area and market has already given a move, day before yesterday it was a calm area over here, and day before yesterday it was a calm area over here. So I assumed that market would be going sideways. So though it is not a perfect sign, but it tells you that market could go sideways, and the evidence of it is on the previous day's price action over there. So I took a trade over here by analyzing the market and the pivot points that this could be an important zone. Here I took a strategy, and the shorts for initiation of strategy is here. A strategy that is short straddle and short strangle. The market is at 37,741. In short strangle, we have taken up the strategy of 38,300 call short at a premium of 193, and we have taken up a strike price of 37,000 put short at a premium of 184. Right now we are looking at 23,875 loss, that is 0.16%. In short straddle, we have taken up the strategy of 37,600 call short and put short, and we are looking at a profit of 10,375, that is 0.06%. So you saw that I took a strategy over here. The short that I showed you right now is a live trading short that I do on Mag Nifty in the live trading session. So today I took a live trading screenshot of mine, screen recording of mine, put it up on my YouTube shorts just to for a reference for the people who trade in Bank Nifty and take trades. You can see my shorts which shows the analysis of the market, the pivot points, what strategy did I put in, what are my important catch in the market, that is what are the chart patterns forming, what is my outlook of the market, what profit did I book, or is there something fishy going in the market. So you, while taking a trade, you could look at my shorts and make up a U or use it as a reference. But before taking any trade, I will sincerely request you to do your own research as much as you can of option Greeks. If you want to learn about option Greeks, please search option Greeks by Pro Trading Zone. This video will give you an in-depth understanding how you should look at the Greeks for zone trading and for directional trading as well. It will give you a proper understanding about how Greeks work in the market and how to use Greeks in your favor when it works in the market. So later, market went sideways, but it was coming down. And when I took a trade over here, I believe that important zone for me was 37,850 and 37,542. But as it started coming down and climbing up, I realized that it was a very small zone. I should consider even larger zone as market could go sideways, and as it was a very big candles in the previous day, previous session, that was in the morning session, I considered later 37,958 as an important pivot point. So once market came over here, so we didn't take any trade even though we saw this chart patterns forming over here that there was lower low. I didn't take any trade. So just to give you an example of zone trading, in zone trading you take a directional, non-directional trade, and in zone trading you take a non-directional trade, and after taking that non-directional trade in that particular zone you do not take any other trades. Even though you find that there was a perfect setup forming over there, you do not take a trade over there. The reason for it is that if it is in the zone and you are doing zone trading, whatever happens in the market, even though it goes up or down, you are bound with the rules of zone trading. That is, you do not take any trade if market is between this pivot point and this pivot point. Once you have put in your non-directional trading strategy and you are following zone trading rules. So once market went over here, I cut my call short position as market was going out of our range or our zone. But as soon as I cut my position over here, market started coming down. I was looking at a decent profit over here. So when market came down over here, I exited and we booked profit. So here is a live shot of a booked profit. We exited all our trade as soon as market breached over here. We exited our put. As soon as it started coming down, I exited my call position also. We have exited our both the position in short call and short put position. We are looking at a profit of 20,000, that is 0.15% in short strangle. In short straddle, we are looking at a profit of 1,28,750, 0.086%. We are exiting all our trades and we are booking profit. So you saw the live book profit over here. Even though market was so choppy through the day, and if you would have taken trade even over here, if you are following the uh, zone strategy, you wouldn't have taken any trade over here or here until it is breached. If you would have seen this candle in the live trading session, it just spiked and came down and ran over here somewhere. So it would have then triggered a sell for call short. So if you consider all these patterns to be an important things in your trading session, the chances of you taking a wrong decision in a short movement in the market is reduced. One of the biggest problem for an option buyer is that it doesn't understand about option Greeks, or it doesn't understand that there won't be a big directional move in the market. Just to counter that, zone trading helps you to beat all these odds by not taking a trade in the zone. So if you consider this to be important pivot points or important learning, I would sincerely request you, please like, share, subscribe with your friends. Come to the live trading session. I put in daily updates of the trades that I took, chart analysis, the pivot points, and much more. And finally, we will look at the chart patterns in the market that made sense to me. And when you look at the chart pattern, the most important point is that you do not try to see what market is not showing you. You see only what market is telling you to look at. So even though over here you can say that there is a W pattern, there is a W pattern, but this was a very shallow W pattern, and it wouldn't have much sense for me to take a trade depending that this is a W pattern for me. When I consider a W pattern, it should be at least this much of height or length. Even though it is crooked, it should form a proper W pattern. This is a very shallow W pattern. You cannot consider it as a W pattern as a whole. So just for an understanding, you could consider this to be a base where it has formed a base over here which has a very strong resistance, and it took a support and started going up. But this is not something we do. Where we do not find a good trade, we stay out of market. So I would have not taken any directional trade if I was a directional trader or option buyer or an only option seller. So once it went over here, I saw that it took a resistance on the important pivot zone of pivot point of 37,958 and started coming down. So I saw there was a lower highs continuously forming over here. Even though it is going over here, the important point to notice is that you decide what trading setup you are considering. You do not just flip flop from one trading set. You just do not flip flop from one trading strategy to another just because pattern just change according to the long term. That is intraday's long term pattern. Intraday's long term trading pattern is been forming, and you just take a trade because it just breached something. If you do in this fashion, you will find yourself in trouble many times. So that is why we do not take a trade in zone trading, even though there are certain patterns forming within the zone, that is over here and here. We do not take any trades in this zone. So once it breached the zone, it gave you a proper 100 points of price action movement, which would have given you a good money out of it. You would have taken a trade around here when it breached, and it just gave you 100 points. And later, once we have exited over here, I generally tend not to look at the market in the perspective of taking more trades. When you are sitting in the profit, you take that trade, you take that money, you keep it to yourself and go out of the market. You respect what market gives. And even though you can see there is a kind of an M pattern forming over here, or you could say there was a W pattern forming here, a crooked W pattern. This could be considered as a good W pattern, but it was in the last hour of the day, or it was something that wouldn't have excited me to take a trade, because at the end of the day you never know in what direction market runs exponentially. You would have seen this thing in the last month's trading. So this was this was not that of an easy day, but if you know what to do and what not to do, you would have made money. Even though after market chart shows you so many setups, but in the live trading session it is important for us to understand that not always all trades are to be successful if you take it, and only high probability trades needs to be followed. So that's it for today. Please like, share, subscribe if you like my analysis, you like my learning from this video. Share with a friend, make come to the share with a friend, come to the live trading session, let's trade together. Look at my live trading shorts every day. You will have a good perspective about my idea towards market and how zone trading works. Thank you.